First question to Arpit, obviously. Have you challowed the Ather scooters, motorbikes? What are they called?
I haven't, but just to clarify, I haven't tried any EV. So
Wow, he's like dil pe mat lena. I haven't tried anything. I'm uniform like that. And you commute.
Good customer for me.
Oh, you're gonna have to hold up the mic right here.
Good, I think good customer for me to.
Good. Yeah, that's your TAM. Exactly, right here. Awesome. What about you? You ride on your Ather to work every day?
I do, and in fact, I used Razorpay app recently for purchasing one of my cycling accessories.
thank you.
Cycling access. I like the mutual admiration club going on over here. We're gonna try and bring. Wait, you said cycling. Ather is already trying to save the planet by making sustainable motorcycles. आपने motor निकाल दिया और cycle सिर्फ रखा हुआ है.
Yeah, even more sustainable. So I do dabble in triathlons, so part of that.
Look at this peak Bangalore humble flex. Man is a triathlon and he's a CFO. Okay, quick backgrounder in case people don't know this. Razorpay is among India's most valuable private fintechs and it's planning its IPO in the next 18 to 24 months. That's the kind of time horizon. And Ather just completed successfully their public listing in April 2025. Congratulations. You must have taken a long holiday after that. So the first question is actually to you, Sohil. What's the biggest myth that you think is going around about IPO readiness, that still persists in 2025? And is the market judging companies differently now than, say the 2020, 21 growth at any cost kind of a cycle?
Interesting that you asked that question. So in 2021, we had companies and the markets characterized and like companies where they were concentrating on top line, revenue growth, market share,
Valuation.
and they were the companies who grew very rapidly at a massive scale were considered to be rock stars, right? But we have seen over a period of time that if you don't focus on profitability, sustainability, cash flow sustainability, governance, we have seen the valuation mismatch come up in these kind of companies. So yes, the shift is vivid. Now the companies are looking at not only the quantity of growth, but the quality of growth as well. There is a lot more rigor in terms of how you even approach the markets even before getting listed, right? So the investor engagement starts even much before the roadshow. I would actually urge a lot of companies going public to actually do a non-deal roadshow where you meet public market investors on the road, get feedback from them, get feedback on the business. It will sharpen your pitch. It will sharpen your documentation. There is a lot more rigor in terms of documentation. So we have seen regulators returning documents if the risk factors are not clear, the objects are not clear, the KPIs, the key performance indicators are not clear. So a lot more rigor in terms of governance has come in. And as part of that, what is now required is it is not only a finance-driven project or process. It has moved to a very internal org transformational process across the org, where you have to change your process, your systems, your controls, even constitution of your board, the way you do fundraising, the way you document the fundraising, anything and everything has undergone a change now.
That's fantastic. And we're glad for that change. It's a welcome change. While he was talking about documentation, Arpit, in my head, I was thinking at Razorpay, are you all using ChatGPT or any other LLMs for the kind of incredible amount of documentation that goes into place pre-IPO? Is that something that you all are flirting with?
Yeah, so we haven't reached the stage of getting our prospectus ready, etc. So I'm sure that documentation will come.
GPT-6 aa jayega tab tak.
But I think we are at Razorpay within the ecosystem using a lot of AI tools to particularly. There is the aspect around coding, which of course has its own nuances, and some of it was being discussed in the last session. But I think a lot of information capturing and summarizing, obviously as long as we are able to contain it within the ecosystem and not let the data go out, I think there is a lot of efficiency to be had. So we are definitely doing a bit of that.
Amazing. I want to know from you, Arpit, pre-IPO, what capabilities are you putting in place now that private investors typically have not demanded earlier? What does that checklist look like? And has that undergone a change?
No, that's a great question. And I think a lot of things that we eventually will need as a public company, whether it's the right level of audit and the right level of list of auditors, the ERP systems, etc. I think those are anyway good things to have irrespective.
Yeah.
I think the rigor that Razorpay is starting to move towards well in advance is to have an ability to think about things on a quarterly basis, and rather than wait for actually to wait to go public and then think about that. And why that's important is that over the years, the mindset has always been, this is what we want to achieve in the next 1 year. This is what the long-term vision is. But the reality is that if in 18 to 24 months time, you will be dealing with quarterly forecasts, you need to kind of start to build that muscle. And that muscle is not just about the business aspect of it, right? You want to build a quarterly muscle, you need to close your books on a quarterly basis, right? Of course, I'm sure you are already doing that. And closing books, often people think, when they think of how the performance is, they think of the P&L, right? But in reality, public market investors or any sophisticated investor, to fully understand how a company is doing, looks at the P&L, looks at the balance sheet, looks at the cash flow statement, right? In fact, there are some public market investors who are only interested in what's happening to your free cash flow. Now, often it's one thing to kind of say how your business is doing from a P&L perspective, but building that quarterly muscle on the financial information, the ability to close the books, and also for business leaders to start thinking about what does the next quarter look like. Now to balance that, what you don't want to do ever is to run your business on a quarterly basis. You've got to kind of constrained by the ability, by the need to kind of have a view on quarter, but continue to balance that with the focus on on the long-term aspects of the.
Absolutely. Thank you so much for that, Arpit. They say everyone has 2020 vision in hindsight. You clearly definitely do have 2020 vision personally. But in hindsight, Sohail, what's your biggest, we should have started this maybe a little earlier, maybe 2 years earlier, kind of a hunch? And how does that lesson play out in, say, today's 2025 market environment? Essentially, I'm asking you for cheat code. आपने board exam दे दिया है, इनको अगले साल board exam देना है. So what can he essentially learn from you?
No, so there I have a plethora of cheat codes to share. So
Amazing.
I'm glad to share with everyone. So interestingly, in our case, we did a very rigorous gap assessment exercise 1.5 to 2 years back. That, hey, what do we need when we want to go public, when we are thinking of going public, right? The good thing in our case was that the governance was already in place because we had a very strong board where the accountability was next level, in fact. So we had quarterly closures, we had audits and all of that. So every company will have a very unique challenge when it comes to it. So for example, people say that, hey, restating 3-year financials is a task. In our case, that was not even a discussion, right? It went very smoothly because we were already at the trigger. You had a Big Four auditing your books, all of that, right? But let me tell you few of the long lead items where actually people don't think about it, and it generally sucks up the energy of the bandwidth of the board, the management, and the teams, right? So things like, for example, capital structure, right? There'll be a lot of unicorns, a lot of startups with right from Series A to Series F and Series G and all of that. So you need to unwind that capital structure. The SHA will fall off. The commercial understanding will have a lot of milestone clauses for the promoters, for the CXOs, all of that. So that needs to get in line with what the regulators want, what the public market expect. The second thing is in terms of the overall way to approach the business, the narrative, the P&L, the way you look at it, just like what Arpit said, that becomes important because that eye is very different. That is another thing which we have realized. Another thing is the documentation part of it, because this, for example, if you go back to your capital structure, the ROC filings, the forms, everything that you have done since time beginning, everything comes up for public scrutiny. Wow. So you need to get that documentation and everything through. you will need to choose very smart bankers. See, every bankers, I'm sure people will be queuing up with Ankit for becoming a banker for his IPO. But it is very important to choose the right banker who believes in your journey, because for them, it is just one transaction. For you as a company, it is everything, right? So you want people who are equally passionate, equally committed to your process. Even the councils, right? All the intermediaries, all the councils, even though you will have a bankers council, you will have a company council, you better ensure that both of them work as one team, as a company council, so that there are no conflicting views, there are no conflicting audits, there are not conflicting due diligence queries, and so on.
Wow. Yeah, you could definitely organize a masterclass on it. Here's a free idea. You can actually make a MOOC out of it and sell a course. It's a very Bangalore thing, right? Is making podcasts and, all these tech bros making podcasts, is that part of the IPO pre-roadshow or something like that?
I think he'll be able to better comment. SEBI has a lot of rules and regulations around what you can and cannot do at certain times. So
no, but suddenly there's a surge on, oh my God, we're going to go IPO in a year. The promoters and the founders, everyone needs to have chaka-chak LinkedIn pages, and suddenly personal branding experts are roped in and things like that. Does that happen?
So interestingly, I just an anecdote. So when we were going for the roadshow, people, are just very suited, booted, and they are said that this is how you should present to the investors. I told the CEO that, hey, we are not that company, right?
Yeah.
Culturally, we are very different.
Yeah.
So why not do sneakers, jeans, and t-shirts? And everybody's like, yeah. So yes, the internal protocols do change.
Yeah.
The way you do press releases, the way you communicate.
Yeah.
In fact, in a very young company like us, where the communication channels are very open, everything is very accessible to everyone. It's an open door policy. There are open mics happening every 15 days. It becomes important to then kind of bring that rigor, bring that education without compromising the culture.
Fantastic. Okay, last two questions. Arpit, what would you say is your most critical insight for those that are still in preparation mode? One of the statistics that was floated here in the morning was, I think we have about 190 plus unicorns in the country, and only about 20 plus have gone public. So there's a vast delta of companies that could potentially go public, unicorns, etc. So what's your critical insight or nasihat for those who are still in prep mode?
Sure. So I think there are a couple of things that I want to talk about. One, I don't think getting ready for IPO should be considered a project, 9 to 12 to 15 months before going public, right? I think this is,
because a lot of people try to time the market also, right?
I think one small comment. I think one should never try to time the market, because that I don't think you're getting listed for a really long time, so it doesn't matter a particular quarter or a few quarters here or there.
Yeah.
But coming back, that this is not a one-time project, right?
Yeah.
The capabilities that you need to build, of having the right financial systems, the right reporting structures, the right kind of independent directors on your board, all of those things take time. And as you then approach the actual event of filing your DRHP, etc., you're then not scrambling to figure out all of this in 6 to 9 months.
Yeah.
I mean, if you want to be thinking about, for example, how you want to demonstrate your story to investors,
right?
And therefore, these are the particular segments, these are the kind of business units that you have. You can't do all of that, in a few quarters. So I think thinking about this very deeply, well in advance. Like, I would say nobody is ever going to say, "Oh, I started my IPO prep too early." So I think that's what I would say is one thing. The second thing if I can quickly talk about that as well, is I know you also alluded to growth versus profitability.
Correct.
I think we are also over indexing in the last 12 to 15 months on, if you have to go public, you have to be profitable, right? Mm-hmm. I'm not saying profitability is bad, but growth is actually more important, I feel.
Interesting.
And I'll tell you, so that's a bit of a contradictory view, but bear with me. Have you ever seen a company with no growth going public? So I think in some sense, it's almost a prerequisite. So of course, if you have growth as well as profitability, that you're more attractive. But so I think this notion also of, as a pre-IPO company, growth is more important. And suddenly when you're thinking about going public, that profitability is the only thing. I think that balance of growth and profitability needs to remain throughout. Maybe the indexation changes a bit.
Interesting. Do you want to quickly react on that? I love how he's just like thrown it to the wolves. And he's like, just my humble opinion here. Sohail, I know you want to react.
No, I think the public investors have evolved over a time, and people are seeing through how to even evaluate companies who are not making profits, right?
Yeah.
So there is a lot of focus on how the management is, the strength of management, strength of board, strength of governance, strength of compliance, how the vision is taking the company, growing the company, even post IPO. What are the next 3 to 5 year strategic plan? Where are you in terms of your product roadmap? Where are you in terms of your growth, your profitability, your cash flow? So if your margins, your product roadmap, everything strategically stacking up, then I think people have, the public markets and the investors now have that maturity to appreciate and understand different dynamics for different industries.
Amazing. Okay. Last question. I'll come to you last, but to you, if you could do this all over again, is there just one thing you would do differently? It could be personal, it could be team level, it could be org-wide, anything. Sohail?
So I would definitely take reins from the bankers earlier. So never listen. All of them are dear friends, but you need to take rein directly, engage with the investor directly. You need to know the feel on the ground, what is happening, because otherwise it is too layered when it comes to demand, valuation, pricing, all of that. So I would say that is direct engagement is always better. It brings transparency. It brings you closer to the investor. And maybe another thing is the companies going the public way. I mean, and the right example with Razorpay. You should also take into account the capital structure, because it becomes little complex when you have promoters with a lot of shares, MSOPs, EPSOPs, ESOPs, a lot of instruments, complex instruments that needs unwinding, a lot of tax implications. So it's rather to be more watchful on that, so that you can reward the people rather than just having, tax hits.
Amazing. Arpit, do you have any personal manifestation after listing, like a chutti you want to take, a place you want to go to, or something that you are gatekeeping for yourself that you will do this only post IPO?
No, as I was, waiting for this session to get started and chatting with Sohail, he told me about the number of meetings that he had to do with investors. I know I'm going to need a long break after this.
Amazing. Big round of applause for Arpit and Sohail. Thank you so much, gentlemen, for that amazing conversation.